Okay, today's the first day I'm going to try something with the hedging. Instead of putting my long position over here, which is usually the MNQ, because I like to trade micros, I go long the MNQ mostly, and then at the same time, I'm short the MES, which is another micro. I'm short two different instruments on two different accounts. But what I've done today is I went long the MNQ, and I went short the MES, except it's the same account. This is the first time I'm doing the same exact account, not two different accounts, but the same exact account. And when I entered into the hedge, I was up just about $100. At one point, this was up to 115. And what I'm trying to do is keep an eye on this. I want it to stay green. Okay, I don't want to lose my green on it. I'm short and long in the same account with two different instruments. You can't do the same instrument. Don't do the same exact instrument, but two different instruments in the same account. It's just like having two positions in your account. And I'm curious, very curious to see how this works today. I may be adding to both sides in the same account and taking profits and doing like I always do when I hedge, except it's all in the same account, and see what happens. Okay, I have to run somewhere. I'm going to close this position. We are up from, it was about 100, now we're up $124, $123 right here by practicing that technique. I like that result. So let me just get out of it real quick. Close both sides, and I'm happy with that. Okay, we're done for the day. We'll see you on the next video. Hope everything's working out in your life. Peace. Okay, I had an overnight hedge that I talked about in the previous section here. This is the second one for the morning, and I just wanted to show down here I've got my highest account hedged with two short MES and two long MNQ over here on the bottom right. Okay, so this is just 2 and 2, and then I'm looking at the total here for my highest account, because it's got to get to 53,000 to pass. It's at 52.3 right now. And just putting that on right now, we are net positive almost $40. And I just want to record that and say I like this technique. But overnight, the other accounts, I had 4 accounts copy pasted right here. And I had made some bad trades practicing, and that's why it's down. But overall, when I finally got it right, this is the totals that would be in, but these are from the mistakes that I was making, just kind of adjusting, had miscalculated some things when I was entering in the trade. But overall, this is what it's looking like for the day had I not made those mistakes. Up 53 on all 4 accounts and up 42 on this one account here. And I like this technique. Now, it can go against you as well. Keep that in mind. So hedging still has to take an understanding of technical analysis and good setups and trade opportunities and stuff like that, and also balancing both sides of the hedge properly. How many MESs do I need to short compared to how many MNQs do I need to long? What's the ratio and position sizes for both? That's also stuff that's learned over the course of practice, and I'm liking it, and I'm going to keep doing it, and let's see what happens here. Okay, my strategy today is to copy paste 4 accounts to be short and long, 2 different instruments in the same accounts. They're all copy pasted the same way. So that means every single one of these accounts right here has the same position, all 4 of them. Okay, and I am short. I am short the MES in that account, in those accounts, and I am long the MNQ in those accounts, both. So I have a hedge, a long and a short in the same accounts. Every single one of these accounts have the same exact positions because they're all copy pasted to one another. Okay, I hope that makes sense. All right, why am I doing that? Because I've noticed that instead of putting them in different accounts, putting the hedge in different accounts, putting the long side in one account, putting the short side in another account, if the instrument moves drastically against one of the accounts, because one of the sides are going to be red and the other is going to be green, you have a chance of hitting your stop loss in those accounts, or hitting the daily loss limit, or even blowing the account. So in this way, you're balancing out those losses in the same account. I hope that makes sense. I like this a little bit better. So far from what I've tested, it seems to be better, and you're not taking a chance on blowing the accounts or hitting the daily loss limit. I guess I should also point out that there is a learning curve to finding out the right balance. I started off with just doing 1 micro of the MES and 1 micro of the MNQ. And I believe the ratio is a little bit better if you have more MES in the position size than the MNQ. Now, that all depends, because sometimes the MES moves in the direction or wrong direction. It diverges a lot faster while the MNQ is sitting consolidated. That can happen. So this is not a foolproof plan. This is just what I've experienced in doing this over time. I like to be heavier on the MES when I want more of a balance. When I want more of a balance between the hedge and I want slow growth. If I'm looking for fast growth and I'm biased in one direction, I don't even have to put on a hedge. I can just go long. But if I want to put on a micro of the MES and I'm long the MNQ, and I'm bullish today, I can hedge 1. I can just put 1 instead of 4. I don't have to. I can do 3. I can do 2. I can do 1. I don't have to have a more equal balance. If I'm bullish, I'm going to be heavier on the bullish side, right? Or have no hedge at all. So this is all subjective and experimental for you to learn, for us to learn, and to keep on practice and training, and kind of like, like I said, experimenting with the idea. Anyway, I just want to throw that in the video as